Alright, I really don't know if this is fucking working. I hope it's working. I hope everything sounds good. I hope I'm not too loud. I'm gonna move the mic closer to my face, but I'm gonna turn it down a little bit because okay, yeah, no, that turned it up. How's that? I hope that sounds all right. Let me check. Let me check. See if I can see my stream on my phone, or I can actually do it on my computer. What does that look like? I need this to be in my headphones. All right, cool. Yeah, all right, yeah, that sounds fine. I've got my volume a little bit lower, but I mean, if you could turn it up if you can't hear. I just don't want to be able to hear too much background noise. That's the only thing. What does that sound like? All right, yeah, that sounds fine. I've got my volume a little bit lower, but I mean, you could turn it up if you can't hear. How do we sound now? I just don't want to be able to hear too much background noise. What does that sound like? Yo, can I still hear my headphones? Yo, can I still hear my headphones? Okay, all right. Yeah, it doesn't sound like I can hear my headphones. It doesn't sound like I can hear the chair that much. That's pretty good. So that means we shouldn't hear that much background noise. So we're going to be talking about these charts over here a little bit. There's a couple things I wanted to go over, and I wanted to just talk about. Okay, I can hear myself. I got to turn this off. All right, we'll mute that and just exit off of that page for right now. Don't need it up. Don't need that up. Don't need that up. And I'll go here and do this. All right, boom. So that way, if I need to get on the stream on YouTube for whatever reason, actually, not fuck that, because I got it open in OBS. I don't even need to look at it in there. All right, so I wanted to go over some analysis and just talk about a few things. This was a trade that I was looking at. I'm not trading currently. I'm taking a break from just trading the markets. Hold on. All right. So yeah, like I was saying, I'm taking a break from like staring at the fucking charts all the time. One thing that I've done way too much of, spent way too much doing, is staring at the charts, and it's caused me to waste a lot of time, waste a lot of money, and waste a lot of energy on looking at these charts. So we've been taking a break and just taking a step back. This week, I actually managed to fix my computer, so I did that a couple days ago, and here we are, freaking streaming fucking charts and shit, right? So just been taking it easy and focusing on just life away from the charts. And I think that's important to do, because when you do that, you gain clarity on just a lot of things in general, but especially in trading. Breaks are important because you taking that step back is like zooming out. It's like literally, it's like zooming out. Just zooming out, you see more of the bigger picture when you take a break. Okay, I'm not gonna continue to speak on like speak life metaphorically. I'm only 23 years old, so it's like, what the fuck do I know? But what I can tell you about trading is when you take a break, it's refreshing. Okay, and that doesn't mean you have to just completely ignore the charts, right? But take a day off of executing. Take a week off of executing. Me, I think I traded last week, maybe. Yeah, I traded last week, so I haven't traded in a week. I think last Thursday was the last time I took a trade, or maybe last Friday morning. And that whole week I hadn't even taken a trade up until that Thursday. So almost 2 weeks of just not executing. Thursday I fucking had a losing day, and then that Friday I had a losing day. So this week I didn't trade again, and I haven't been worried about what the hell the market's doing, right? So like when I started not trading, right, we got to go back like 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so like around here is like when I was like, all right, I had passed some combines within this. I activated the accounts. I blew a couple challenges, and then right in here, when I was activating the 50K account that I passed, like it took me a few days to activate it. Like I took a few days to just chill, and then I activated it, and I fucking blew the XFA within those 2 days. So that Thursday and Friday I blew the XFA, and I was like, man, fuck this. Like I'm just going to continue to not trade, because maybe there's still things that I'm missing, and taking that step back is what's really allowed me to sit back and be like, maybe there's still things I'm missing, so it's just, this is what I'm saying, is taking a step back will allow you to gain clarity. Now that that's all said and done, why the fuck is this important, and how can this help us in our trading? So taking that step back allows you to get out there yourself, and allows market conditions to do what they're going to do, right? And again, when I say you take a break, that doesn't mean you have to ignore the charts or have to ignore what's going on in the market overall, but you can still pay attention to what is happening. You still want to pay attention to what's happening. You still want to be in the loop, so that way when conditions do become favorable for you to trade again, then you can execute on that. Today would have been an amazing day for me to execute on trading, but I just didn't want to. I could have taken this trade. I could have loaded up an account last night. I saw this trade last night. I already knew what I was looking for last night, and I completely ignored everything that was going on until the New York session, which was the session that I wanted to trade. Now, if I never took my break, if I never went on a break, I wouldn't have that clarity to be able to skip these sessions, because I'd still be in that same mode of, oh my God, I want to be looking at the charts 24/7. I have to be in the market doing something. I have to be getting some point somehow. But now I don't give a shit. I only care about what's going on when I want to see what's going on. And for me, like, I know the best moves usually come in the New York session, and I have the ability to trade the New York session. So why not just focus on the New York session, especially on a day like today where it's NFP? You know what I'm saying? So taking that step back has allowed me to be able to see things in a different manner. Like, all right, well, what time am I placing my trades? Right? So here's a trade that, here's the trade that I would have liked to have taken today. Again, I had a bearish bias coming into the day. Now, I'm going to get into all the analysis as to why I had a bearish bias. And like, I don't know if I'll delete these drawings. I mean, I could delete them. They're all going to come back anyway. So we'll delete them. We'll delete all this shit, and we'll redraw it. And we'll start with a top-down approach. Right, so just real quick, like, look at this. I usually keep my drawings on, but you don't have to. I just got back on my PC, so like seeing all this data is amazing. I've been working from my phone for the last like 2 months, so like being able to see all this is freaking amazing. Anyway, we're going to delete all of this. Okay, how the fuck do I delete all my drawings? It's right here. All right, so we're gonna go over a few things. I'm gonna tell you what's on my chart, and yeah, I'm not gonna hold information back from fucking nobody. No one's in this shit anyway, you know what I'm saying? So, starting out in the beginning of the day, we got the daily candle. And if you're trading prop firms, you're a day trader. So, I've focused on being a day trader for the last pretty much all of the time that I've been trading. I mean, there was a little bit of time where I was swing trading options, and you know, I just didn't like it. So I focus a lot of my time on day trading and what can happen intraday. Why is that important? Well, this is the groundwork for what I'm about to tell you. So you have to know your trading style. For me, I'm a day trader, so I only care about what the market can do within this daily candle, and what can I do? How can I operate within this daily candle? So the first thing that we start with is the daily candle. I really don't care what's going to happen on the monthly or what's the fuck's going to happen on the weekly. I mean, it's kind of good to know, you know, what is happening, but you don't have to have that to frame a bias for a trade. So my bias comes from daily time frame. The first thing I noticed was this daily candle has no wick. Alright, so yeah. So this candle here, daily candle has no wick. Now if we look at candles on any time frame, what you'll notice is almost every candle has a wick. So when I see a candle that has no wick, the first thing that I do is take note of that, because eventually I do expect there to be some form of wick be put in. Right, look at this. This candle here has absolutely no wick. All right, it's NFP Friday, so to say that even up here we couldn't come back all the way down here is, you know, unreasonable. We have every reason to be able to come back here. Almost every candle has a wick, and if it doesn't have a wick, then we trade, you know, towards it relatively shortly after. And you don't have to take my word for it. You can go into your charts and look at it and look and see for yourself. So even if it doesn't trade all the way down here today, Monday we could trade down here. But the initial bias for our trade comes from when we see this daily candle at the open have no wick. I immediately want to see NQ eventually trade under this wick. Okay, so if we go down to the 1 minute, what we'll see is right here at the Asia open, right? We gap down, 1 minute, no wick, and then we just traded higher, higher, higher. You know, filled that new day opening gap and continued to trade higher. London didn't have any super big move, and then NFP, we shoot up, create this fair value gap, and then in New York we trade higher up until this point here. So we're going to go back out to our 4-hour time frame. Now on the 4-hour time frame, if we compare NQ to ES, I have a second screen, so I'm looking at my second screen over here where I have ES pulled up. Right here we have an SMT as well as right here. Boom. Oh, no, it's actually, is it right here? Yeah, because that candle put in high. So on the 4-hour time frame, we have an SMT right here. And whenever I'm taking a trade, I usually want to see some form of SMT be put in. Some way, shape, or form. I need to see an SMT. And there's two different ways that I use SMT. SMT can be used as a target, and SMT can be used as an entry tool. So we had an SMT up here on the 4-hour perspective time frame. We had SMT down here. Okay. Again, this is a no wick. I do want to see this be traded to. And now we have SMT. And like I said, one of the ways I use SMT is as a target, because SMTs are always being formed and being ran through. If one's not being formed right now, then that means we're targeting some other one. Okay. So we formed an SMT down here, price ran higher, and then we formed an SMT up here. So now I do want to see again us trade back below this candle because there's no wick here. So we drop down to the 1 hour time frame, much of the same thing. I mean, we can clean this up a little bit because it's this candle, like that, and like that. As we drop through these time frames, it's going to get a little bit messy. And then we also have a 1 hour SMT right here. And Q makes a higher high here, where ES makes a lower high. Now, the first time it was the opposite case, where right here on this candle, ES made the higher high and swept this high, took liquidity out of this high, where NQ did not. So now this is a failure swing, right? And then right here, ES failed to take out this high, where NQ did take out this high, right? So now we have we've got 3 SMTs going right here, type shit. So one of the first things I always look for is like, where are the SMTs forming? They're forming at the highs. So I want to see whatever SMTs are forming on the opposite end be used as liquidity, or whatever SMTs have formed on the opposite end. I want to see them be used as liquidity. So from the 1 hour, we can immediately go down to our lower time frames, such as a 5 minute and 1 minute. I'll quickly look at the 15 here real quick on both of them, just to make sure I'm not skipping over anything. Okay, yeah, it's between these candles, but we'll see that on the lower time frame when we drop. All right, we're going to go down to the 1 minute. So now on the 1 minute, I'm going to turn on one of my indicators here. And now this is a midnight opening range indicator published by Trades Don't Lie. Shout out Trades Don't Lie. Ever since I started using this, I started seeing the market in ways that feels illegal. Okay, I should not be able to read the market this fluently. And had I not discovered that indicator when I did, who's to say I'd be as far as I am right now? So shout out to Trades Don't Lie for the indicator, because I'm telling you, it really made me look at the market in a different way. So there's an SMT here on the 1 minute, as well as right here. Boom and boom. So again, now we have another 2-stage SMT here on the lower time frame. So now we've got 2-stage SMT on the higher time frame, 3-stage if you look at it from like all the way back here, right? Because it was like whoop, 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 where ES took out. Oh, right here. ES took out this high back here, but it did not take out this high here, versus where NQ did not take out this high here, but we did take out this high here. And then, you know, there's SMT back here as well. So that would be the 3 stages. Anyway, 2-stage, 3-stage, who gives a shit? All you need to know is there's SMTs forming up there. Now, we've got our midnight opening range. This is a very important indicator, because you need to know 2 things. There's 2 opening prices you need to pay attention to. That's the open of the daily candle, and then the midnight opening price. And then the way I use the midnight opening price is I wait for the midnight opening range to print, which gives us these maroon lines that you see. Now, these maroon lines are Fibonacci extensions of our midnight opening range. Now, what I've found is that you can use these levels as targets, or just not even just as targets, but these levels here, specifically, what you see on the screen right now, usually are the cap of the daily range on any given day. Usually you will not see price trade outside of these boundaries. Okay, so just having this framework allows you to see what you can work with, where price should go. This is like a map. Think of this midnight opening range and these deviations as a map. Where can price go? Where is price going? And you look at the map and you read what price is doing and you just follow the map. So this midnight opening range is our map as to where price can go. So back here at the midnight opening range at the very beginning, all we did was, open. We didn't trade under the midnight opening range, and then we traded higher. Now, when you're forming a bias, or when I'm forming a bias, whenever price is above midnight, I want to be looking for shorts. I find that the most efficient delivery for shorts is when price is above midnight, and the most efficient delivery for longs is when price is below midnight. Now, I'm not saying that's going to be the biggest move. I'm saying that's just going to be when price is going to get to its target the fastest. Likely. That's what I want to see, at least. You know what I'm saying? So, when price is above midnight, I want to see us get sucked back to this midnight opening price, especially when we haven't done any work below midnight. Okay? Think of this midnight opening range as another candle, right? And when there's no work under this midnight opening range, well, that's the no wick. Just like this opening price right here has no wick. If we look at our midnight opening range, there's no wick here. So eventually I do want to see us get sucked back down and trade under this midnight opening range. Now, if we look, we got this lighter gray box here. This is yesterday's midnight opening range, and we can see how that has been influential on price. And if we look again, this is what I'm talking about. So price opens here. This is the midnight opening range. We trade under it a little bit. Price is under, so we should be looking for longs. We get some nice longs right here, right? Price is now above, so then we can short it. Well, price comes back to it. Below, back above, right? Above, back below. You see what I'm saying? So when price is either above or below the midnight opening range, I want to see the opposite happen. And then again, right here, we're above, so we're looking for shorts. Our bias is shorts. Look how efficient this takes out all of this liquidity that was generated between yesterday's Asia and London session. Straight down, bounce up, and we just traded lower for the rest of the day. Today we've opened, we've gone, we've set a high. We know a candle has an open, a high, and a low, and a close. Open, high, low, close, right? So I would want to see a low be put in. Like, I want to see us trade back down below here because there's no wick again, right? But it doesn't have to trade down there today. But I would like to see, open, high, eventually low, and us close, somewhere down below here. There's also like some other important reference point, something like the, New Year opening price is somewhere on this chart. I don't remember exactly where, but the New Year opening price is on here as well. And we're currently above that. So again, whenever we're above important opening prices, I'm looking to do the opposite. Whenever we're below important opening prices, I'm looking to do the opposite. So opening range prints, no work under it. No real move in London. This is the London session here. And London, is up until what, like 11 a.m.? So like the end of London is right here. And that's important. You should reference that. What did London do? Well, if we look at this, to me this just looks like a bunch of accumulation. Right up until, right up in here. Right until NFP. I gotta change my box settings. No extend. But that just looks like a bunch of accumulation to me. So this is accumulation. NFP release. Let's pay attention to what happened at the NFP release. If we zoom in, what do we notice about this NFP candle? Well, again, it's a candle with no wick, and that adds to our bias. Now, from this point we really believe that price is going to go lower, especially now that, taking a step back has allowed us to say, hey, we don't want to trade the Asia session. We don't want to trade the London session. We spent too much time and money and energy burning ourselves out doing that shit. So we've completely skipped this. So come right here, 8:30 in the morning. Now we're crossing into the New York session, which is when I started looking at the charts. You know what I'm saying? Like, I opened my chart probably like right in here. And this is when I sat down at my desk for the first time today and, started looking at the charts. Again, I already had my bias being bearish from last night. This opening price didn't have a wick, right? Did I give a shit that this has just traded higher? No, I really don't care, because my bias is still bearish, especially after I've seen NFP now doesn't have a wick. And this right here just looks like accumulation. So, price is cooking, NFP, we shoot up higher. This is now a fair value gap right here. Okay. We continue higher. Here is where ES puts in the SMT with NQ. We're going to go to right here, 938M. This is the New York equities open. And I think we could just do this. Turn on regular trading hours. Yeah, so boom, regular trading hours, we see this big ass gap up, right? So when we see this gap up, when we see gaps, what do we expect to happen? A lot of the times we want to see at least some of it get filled. Okay? So we got this gap right here. We got to do yesterday's settlement price, which is this close right here at 4:14 p.m. to, and I didn't even look at this today, right? But I'm looking at it now, to today's opening price, which is right there, because I just want to see something. So whenever, there's a new day opening gap like this, you should at least want to see that 25% be hit. And that's what I wanted to see. Did we hit that 25%? Well, yeah, right here on this first leg. Pop back up. And now, boom, we've traded back to it again. And yes, I do think price will continue lower and fill in this gap. So we're going to delete this drawing because I really didn't look at this today. I'm just going to show you guys what I was looking at when I was formulating my trade idea. So back to extended trader or electronic trading hours. Now again, at this point, I tapped into price when it was like about right here, or no, right here actually. This is where I started looking at the charts for the first time today, right in here. And it may sound like bullshit, but I promise you, it's not bullshit. Okay. I can show you time receipts. Actually, I will show you time receipts on my phone as to when I threw up my drawings into my group chat. Just so you guys know, I'm not fucking bullshitting. Like, I've been up looking at this shit. And this is not a cherry-picked example. Even though I really don't give a shit what you think, but I'm just doing it to have the proof and credibility. Okay? So, look, here we go. Last night, let me pull up this so I can see if I'm doing this right. Alright, so look, last night, when I was talking about the trade, easy money, you can see I was calling it out, how it has no wick, and then focus, and then boom, right here today. What time is this? Y'all can see it, right? It's like 10:18 or something. Yeah, 10:18 a.m. for me, which is like 11:18 New York time. So started looking at the charts about right here, and I was like, all right, so where are we at? What's going on? Well, we had NFP down here. NFP has no wick, so I took note of that. So we're just going to mark this out right here. This is the NFP candle. It has no wick, and that's just where I would like to target. So NFP candle, no wick. We'll leave that like that, and we'll put that right there. So again, this now becomes a target for me because I know this is an algorithmic reference point, because when I see a no wick candle, I already know that eventually the market is going to trade there, is likely going to trade there eventually. highly likely going to trade there eventually, especially when it's, you know, a news candle. This candle happens to be NFP candle, right? Which again, I believe it's highly likely we trade back here, and it doesn't have to be today, but I do believe highly likely we trade here eventually. So bears bias. I'm not looking for longs. I really don't give a shit about longs. Well, then what's happening up here? So we tap into here. We look left. We see this SMT here, and we see that price puts in an SMT here. So now we have two-stage SMT. Now what I want to look for after I see an SMT is I want to see a balanced price range be created. Now, if a balanced price range does not get created, I want to look for an inverse fair value gap. So I started looking for inverse fair value gaps, and then I was like, let me note where the first presented fair value gap of today is. So we go to 9:30. We can go to our regular trading hours to do this. So we open up, we look, we get this little fair value gap here, but we're not going to pay attention to that one. It's not enough points to consider. And we continue looking to see what price does. And boom, right here, we create this fair value gap at 954 to 956. This was our first presented fair value gap. Boom. So I took note of that. And then it became really clear. Okay, well, this being the first presented fair value gap, what has happened? Accumulation. We drop below, take out, sell side under here, take out sell side under this low back here. We rallied higher. Now we're going to take out buy side. Okay, so now I'm watching ES and NQ to see what happens. NQ ends up taking the high, where ES does not take the high. Okay, ES doesn't take the high. And then again, right here, so this is our first presented. We inversed it here. We came under. Then we had another inverse fair value gap here. We traded above. So now we're looking for buy side to be taken out. Buy side's taken out up here. But ES doesn't take the buy side. ES doesn't take the buy side, and then price starts to move lower. So I look at ES and I say, okay, ES didn't take the buy side. We'll go to ES. ES didn't take the buy side. NQ took the buy side. Well, let's see. Is there any balanced price range to the left of us on ES? At the time, there was not. But then price started to move. Price starts to move, and I'm like, okay, well, we still haven't taken this high. And then I'm like, oh shit, there's a wick here. Now, whenever there's a reversal, there's always a fucking wick. There's always a wick. Whenever the market reverses, there's always a wick. Okay? Now, whenever the market reverses, there's always a wick. Okay? 99% of the time, probably, right? I'm willing to be wrong the 1% of the time that price reverses and there's not a wick, okay? So, right here, I'm like, oh shit, there is a big ass wick right here on NQ, where we also have this SMT. So, I measure out this wick right here, and I want to, I only care about, consequent encroachment of this wick. Now, when I'm looking to enter a trade, whenever I'm looking to enter at the high, this is how I catch reversal plays, or how I look to catch reversal plays at least. Whenever, we got an SMT and a wick, or whenever there's a really big wick, because sometimes there's not an SMT, but whenever I see a big wick, I immediately, fib it out, and I care about the consequent encroachment point. Because I want to be engaging with said trade when price is just a little bit before the consequent encroachment point. So if I'm looking for shorts, I want to enter, when price is a little bit below consequent encroachment. That's where I'll set my limit order. And if I'm looking for longs, then I want to be engaging with price when it's just a little bit above the consequent encroachment point. So then our position, now that we've gotten all of this information, now we can look to actually gain entry to the trade. So according to, what I look for in a trade, when we notice this wick, we immediately want to, fib it out. And that's just like almost any big ass wick. I really don't give a damn what big ass wick, but it has to be at a certain time. Like if it's like 2 o'clock in the morning, 3 o'clock in the morning, we see a big ass wick, boom, right? Or like 3:30 in the morning, halfway through that point, like 6 o'clock in the morning. 10 o'clock in the morning, 11 o'clock in the morning. You got to know the time when to look for these big ass wicks, and those are just some of them. So this one just happens to come just after 11 o'clock, right? So our 10 o'clock candle just closed, our 11 o'clock candle opened. ES did not make a higher high above the 10 o'clock candle versus NQ making the higher high above the 10 o'clock candle. So this wick right here qualifies for us being able to look at it and how can we use it to gain entry to a trade. So our bias is already bearish. Now we've got two-stage SMT. We've got a big-ass wick. So now we've got everything we need to be able to, you know, see where we can enter at. So this wick gives us where we want to enter at. Again, I like to enter a little bit before that consequent encroachment point. And on my drawings, I'm going to turn, which one do I have to turn off? Is it this one? Yeah, it's that. Oh, no, it's not that one. It's this one. On my drawings, I have it marked as a little green spot right here. This is where I want to set my limit order. So we would have set our limit order, you know, right in here. After we see this wick, okay? After we see this wick. So we see this wick, we fib it. Our limit order can literally be set like within this candle, within this very next candle, we could set that limit order. And it may seem like unrealistic, but it's not if you know what the fuck to look for. Like, it may seem unrealistic, but it's not if you know what the fuck to look for. And I just told you what the fuck I'm looking for to be able to catch this. So even if we don't get it on this candle, we still got, you know, 1, 2, 3 opportunities in here. And then this little pink line up here, this is where I would place my stop. And I would place it just a little bit beyond that. That's what I'm comfortable risking. And as you see, it's only 30 points. And that's in the New York AM session. That's easy money, baby. 30 points. I can risk 30 points in the New York AM session. If I lose 30 points in the New York AM session and that's it, I'm not upset about that. Okay? So this becomes our position. This becomes the first thing that we want to look for. Again, this has no wick, so this is where I want to see the market move to. And this is finally is where we would have been entering. This would have been our risk, 30 points. And as you see, we don't even get anywhere close to that. Now, one of my friends, like when I put the analysis in the group chat, one of my friends in there, he asks me, you know, do you believe that the sentiment is bearish? Well, this is why in the beginning of the stream I was telling you guys, like, because I know what I'm looking for as a day trader, because that is my style of trading. I don't give a shit about what the sentiment is, because I only care about what the technicals tell me should happen intraday. And all the technicals intraday tell me we should go lower. And, you know, this trade idea hasn't been proven wrong yet. You see what I'm saying? So you have to know what it is that you're looking for that fits your style. And for me, as a day trader, all I care about is what's happening intraday. So then we can, you know, start out on our daily time frame to see, you know, what information can the daily time frame give us. Well, the day doesn't have a wick yet. I know eventually we're probably going to come back to that low. Then we drop lower. What would the 4 hour give us? Well, we saw, again, no wick down here. We got some SMTs. We have this little BPR back here that will probably be a target. You know what I'm saying? If price isn't creating a BPR on one end, it's reaching for a BPR on the other end, and it doesn't really look like there's any more bearish BPRs above us for us to reach to. Maybe in here, maybe in here somewhere. And these are the highs from when we dropped in the beginning of the year. So could we put in a new yearly high? Maybe, but I really don't think so. Not right now, not at the moment. Seasonality wise, Ice-T says we should fucking trade lower. So, you know, I don't just blindly believe that, but I mean, come on now. When he throws a lob, you gotta kind of take it. You look for opportunities that line up with that bias. And again, this lined up with, you know, the bias. I was like, okay, maybe we can see prices trade lower. NFP gives us a reason to. We could see price trade lower for the rest of the month. And then like FOMC, maybe then we trade back to NFP. Or maybe we trade fucking higher, NFP, and then after FOMC, then we trade lower and take out the NFP low. But even if we don't trade to this NFP candle down here, even if we don't make it all the way back down here, which I really want to see us make it all the way down to here where we don't have a wick, right? And because we're so close to down here where we don't have a wick, I want to see us hit this 10 extension, because I know this is my, roadmap for where price should be able to go. And because we've extended, above it, if we're going to come back all the way down here to where this wick is, I want to see us hit this -10, because time and time again, I've seen price literally get these levels to a tick. So if it's not going to get it to a tick, I mean, it'll break through it, right? Because like we're already down here at this low, and like, that's right there. I just think we would just grab that. But even if we don't go all the way back down there, even if we don't come to this NFP candle here, this trade right here alone, this move right here alone, it's 115 points. Okay? Just if you were to target these equal lows here, 115 points. Okay? Say if you target these lows right here, 105 points. This is previous day's midnight opening range, so that's a reasonable target to expect. Or even if you don't target that, well, look here, we have this 10 level, and again, these levels are roadmaps as to where we expect price to go. Fuck. Okay, yeah. So this is this gray box here. Previous day's midnight opening range. Again, algorithmic reference point. We could see price come back here. We see we traded above it today, reaccumulated, and then traded away from it. So we could expect price to come right back into here. This is also the 10 extension level, which again, I use these levels as a roadmap as to where price can go. You see right here on this leg, we get right to it. We don't close under it, and then price trades higher up until it doesn't, and then we come back down. Right here, we don't close under it. Here we close under it, and then above it, right? So these are my support and resistance levels. You see what I'm saying? I don't look at a chart like, oh, let me zoom out, let me see on the fucking 5 minute where some equal highs, equal lows are. Then I can like, oh, up here, fucking we traded lower here and we got up here and then we traded lower here, so maybe this is resistance. Now you can do that and it'll work for you sometimes. That's not what I do. These are my support and resistance levels. These levels that get printed daily, and the fresh ones every day that I know price is going to trade to. You see what I'm saying? So even if we don't catch this trade right here, even if we don't catch this entry right here, the next thing I was looking for on ES, because I was like, okay, say I missed that trade. What can I do to still gain entry? Because my bias is still bearish. Well, over here on ES, we then formed a BPR right here. Now, when we formed this BPR right here and we traded back into it, I'm looking to see, can we close above it? We don't close above it, and then price comes and takes out this low. Well, that would have been enough for me to say, okay, my bias is still bearish. We now have a bearish BPR right here. We're trading away from it. Right here on this candle close, when we take out these lows, I would enter that, because now we have SMT, BPR. I want to see price start to expand away from these highs. We have an SMT up here, so we should not trade back up to these highs. The bias for us is already bearish, so when we trade into this BPR, this is the last thing I expect to see before I see price expand away from wherever it is. And then, as you see, we get this quick and efficient delivery away. And it's like, how the fuck do you know is going to do that? You see it time and time again. You see it over and over again. And with enough seeing it, you understand, okay, this is what I'm looking for. So even though the BPR wasn't here on NQ, when we traded back up in here, I'm like, okay, well, was there at least an inverse fair value gap? No. But what is right here? This is the 10 o'clock opening price. So I'm like, okay, so now 10 o'clock, we traded lower, and then we traded up right here, right at the end of the hour. We took the 10 o'clock candle high. Now we've traded under it. We've ran back into the 10 o'clock hourly high. Can we close above it? We barely close above it. What does price do? Oh, we go take the low, close. Okay, maybe now we're going to take out these lows right here that we just generated. Does it do that? Yes, it does. Okay, well, if we continue lower, there's an SMT down here, by the way. Right here. Oh, we've taken out these lows. Where's the next price that, you know, maybe we can trade to if we're going to continue to trade lower? Well, what does this look like right here? Well, it doesn't look like there's much holding price up. This looks like low resistance liquidity. So we should see price slice through straight to these SMT lows right here. Do we do that? Yes, we do. And we do that on both assets. Now they're in sync. Boom. What time is this right here? This is 11:20. Price starts to trade higher up until, you know, just after 12 o'clock. 12 o'clock opens. Now we've got open, high, low. 1 o'clock opens up right here. So, where the fuck did 12 open again? Right here. We've got open, high, low, close. 1 o'clock, we've opened here, open. I think we're going to set a high and still come take out these lows. I think we still trade lower. But right now we've got open low, and this is going higher right now. But again, now we have a BPR on NQ. First presented fair value gaps right here. We've got these SMTs up here. NFP still has no wick. Until NFP has a wick, I still think this is bearish. London did nothing but accumulate. All this looks like to me is accumulation, manipulation right here. Why is this the manipulation? Well, because this is where the SMT is. And there's two SMTs up here. So this looks like accumulation, manipulation right here. ES took the high, NQ did not. And then we start, you know, I got to change the camera battery. Give me a moment. I mean, I could switch cameras. Let me just switch cameras real quick. The lighting might be a little bit different. This may look a little bit different. Who gives a shit? Anyway, back to what I was saying. NFP still has no wick. So this just looks like a manipulation to me. We still got accumulation right here. Accumulation, manipulation. What's the next thing we should be expecting? Oh, distribution, where we're going to go lower. We still want to see this NFP candle, but even if we don't, you know, we've already captured, you know, over 100 points just on this move alone. And if we have the confidence in the balls to hold our trade, let's say we didn't close right here. Oh, well, we still have, you know, balls to hold our trade. We've moved our stop loss to break even right here because we still got an amazing fill because we know what the fuck to look for. Oh, boom. Now we've swept that low. Now we've gotten even more than the 115 points from the original trade. Anyway, hope you guys enjoyed. This has been quite a little ramble session. This is just a little bit technical. Like, because even if, you know, this comes back up here today, which I don't think it's going to do, I don't give a shit anymore. We've already seen 100 points. We've seen 100 points. If you can capture 100 points in a day, do you give a fuck? Do you? Should you? You shouldn't. Okay? You shouldn't. Okay? 100 points, one micro contract, what is that? $200. 2 micros, $400. All right? And typically I like to trade with 15 micros. Depending on the risk. Depending on the risk. I don't like to risk more than, what is it? 20? Yeah. I don't like to risk more than 20 points when I'm trading 15 micros. So because this risk was 30 points, maybe we don't use 15 micros on it. Maybe we use like 7, right? But then we got 7 micros. We just caught 100 points with 7 micros. 100 plus points with 7 plus micros. So that's $1,400. Are you mad with that? You shouldn't be. And would I be able to see any of this if, like, I wasn't, on hiatus? Would I see it this clearly? No. I would have been like, oh, no wick. Let me short. Whenever I see SMT form back here. There probably is some that form back here. You know what I'm saying? Like, let's see. Where's the first SMT that formed the other day? Actually, I really don't give a shit. I hope you guys enjoyed the stream. We're going to be streaming our analysis and our trades more, I guess. Right. One thing I want to get better at, or get more comfortable doing, is doing this shit in real time. Just like, I don't know, that's just something I want to do personally. Not for any particular reason, but it's just something that I want to do. I want to stream my trades. I want to get better at streaming my trades. So how can you get better? By doing it. Oh, also one thing I do want to note as well is right here. After this first leg right here, we did put in an SMT. These are like relatively equal. So I just called these equal lows. This barely took this low. So yeah, even this taking this low, that adds even more reason as to why I'm pointing this out. There was an SMT right here, and what did I say multiple times throughout this stream in the beginning? Well, there's 2 ways that I use SMT. One is to gain entry, and 2 is for liquidity. So we put in this SMT here, but because I believe price is going to continue lower, and we've done all this work up here, we've got our 2-stage SMT up here. This is when price is messy up here, right? So when we put in this SMT, I'm like, okay, well, we're probably going to run these equal lows later in the day, right? So we bounce, and then we run the equal lows, right? And it's like, where does price reverse at? Oh, first presented fair value gap. Look at the consequent encroachment point. You can set a limit order right there, baby. You get tagged in right there. No fucking drawdown on the trade. Oh, BPR. You can add right there when you tap back in. And again, you're targeting this SMT, and you get pretty efficient delivery to it. So these are the things I look for, and this is how I trade. Hope you guys enjoyed. We'll see motherfuckers in the next one. Peace. Hope you guys learned something. If you did, yeah, I'm gonna do. Like the motherfucking video, because I'm gonna leave this up as a video on the channel. I've been rambling for about an hour. I'll catch you motherfuckers later. Peace.